Okay, today we'll be talking about fundamental analysis and technical analysis. But we start with fundamental analysis. Fundamental analysis is a way of looking at the forex markets by analyzing economic, social, and political forces that may affect the market or currency pair. Fundamental analysis here we don't use tools like the Fibonacci retracement, trade lines, swing trades, and the rest. We just look at the trade and then we use the economic um, problems that's happening around us, the economic downfall that's happening yearly, monthly, daily, hourly, and the rest. E.g., like the news, like the NFP, we all know non-farm payroll, inflation, unemployment, and the rest. Just like this fuel scarcity now and the rest. So that's what is causing economy to go down. You know that if something happens to the economy now, maybe a world war or something, you know that prices will start going down and dropping, or maybe something happened again that makes prices to go up. This is fundamental analysis, and it's mostly used in stock markets. Since those ones we don't trade them, we just buy them and keep, knowing fully well that something will happen to the economy, and then this particular pair is going to drop. That's fundamental analysis. We know that something is going to happen and then it's going to drop, so we buy. No, we sell. Yes, we sell them. Then when it drops, we buy them at lower prices. Then when it rises, when the economy is stable, then we sell them. That's just basically fundamental analysis. This is the major economic indicators and their impact on forex trading. One, we have gross domestic product, that is GDP. Then we have the second one, interest rates, then inflation, unemployment data, employment or unemployment, and trade data. So this is what affects the market fundamentally using your fundamental analysis. This happens like news, and we can use, I don't know if you know Forex Calendar. It's an app, my Forex book. You can download it to know news that happens that affect the market. Some of them have high impact, some of them have low impact, some of them have medium impact. Some of them affect the market so greatly. Some doesn't even have effect on the market. It just depends on how intense it is at that moment. Then we move to the technical analysis. Technical analysis here, this is the study of historical price actions in order to identify patterns and determine possibilities of the future dictation of pairs. In this motive now, we use our trend line, Fibonacci retracement, swing trades, high, low, support and resistance to analyze the market. Technically, just in the sense of using tools to analyze the market. Normally, market is the repetition of previous things that have happened before. Market is not a new thing. It creates highs and lows that have happened before. So for you to know that what has happened before is going to happen now is what we call technical analysis, using all those your trend line or support level. Now we all know that support level, if price goes low, it reacts. If price goes to resistance level, it reacts. If price breaks the high, it comes back to the low, that broke the high to react. All those are technical analysis that we can use to trade at a particular time or moment of the market. Some rely on chart patterns, others use technical indicators and oscillators. The most combination of the two. So this is saying that some use chart patterns in the sense of bullish trend, bearish trend. Some people use that only, while some use indicators like RSI and the rest. So indicators and oscillators like that, some use them, while some use the both. You can choose whichever way you want to analyze the market, preferably to you, whichever way you want to use. You can use all, you can use a particular one, all is still going to print the money you want and the money that you want to use. All is good even if you use the two, but one advice is for you not to confuse yourself by using too many. If you use too many, you're just going to confuse your charts, make your chart too rough and the rest. This is example of technical analysis. Price action. This is how the price moves in the market, just like candlestick pattern and the rest. Then second one is chart pattern. The swing trade, the high, the low, the bullish pattern, the bearish pattern, then indicators. Then we have trends, whether it's going up, is a bullish trend, or going down in a bearish trend, then your entry and your exit. Your entry and your exit is very important. You have to know when to enter the market and when to exit the market.